Ladies and gentlemen, we have today with us Yash Roongta, who is CFA, Chartered Financial Analyst, and also specializes in FRM, Financial Risk Management. He is VP at Ladderup Wealth. I would leave the link to his LinkedIn profile in the description of this video. Recently, he was a subject of discussion amongst the investors of Growpital because when Growpital ran into problems with SEBI, his LinkedIn update mentioned, and hear this, finally, our voice has been heard. SEBI has just released an order against popular tax-free agri-investing platform Growpital by Zeta Farms. As a matter of fact, I can quickly show the snapshot of what he wrote on LinkedIn. You can go to the LinkedIn yourself and see it. He also mentions a platform we have been very scared of investing in personally due to the red flags associated and so forth. All right, Yash. So welcome to the channel. For the benefit of our viewers, can you please tell us what Growpital is and what problem it has run into?
So Prashant, Growpital is known for giving tax-free returns up to 20%. In the early days, they were giving 20% returns via a platform called Satik. Slowly and steadily, they reduced that 20% down to, I think, latest, the maximum was 14%. They claim to be an agri investing platform where they take the money from all the investors, pool it into a vehicle, which in this case was LLP, and then use that money uh, to invest in farmlands or lease them out and generate yields out of that farmland by growing crops or other farming activities. That was their business model primarily. The situation they are in right now is that SEBI has frozen all of their accounts, including the personal accounts of the founders who were involved, the directors of the company, along with a restriction on them to participate in the capital markets. So the founders and directors cannot even invest in stock markets, cannot invest in mutual funds. They cannot do anything that is basically regulated by SEBI right now for the next 15 to 21 days until the freeze has been lifted. Uh, I am not sure when will that freeze be lifted. We'll have to see what SEBI does. But to answer your question, that's what is happening with Growpital.
Okay. Uh, what do you think is the way forward for Growpital, and what should the current investors do in this situation?
So honestly, I have been asked by a lot of people out of panic because I've met people who have invested 70 lakh rupees. I've met someone who invested 3 crore rupees in Growpital. I've met someone who has invested 1 lakh rupees as well, which he was not ready to lose, particularly. And all of them have been panicking. My simple answer to that is, we have to wait for SEBI to, do their investigation. You as an investor cannot do anything at all. Even if, let's say, Growpital tells you that can you sign this agreement, can you sign this consent, can you help us voice our opinions to SEBI, nothing will matter if they have cheated the public. And if there are problems with their books of accounts, the assets that they claim are actually, if that's not present, you as an investor can't do anything. You have to wait for SEBI to do their due diligence right now.
Okay, that's an
But
honest
the
answer.
way
Yeah.
forward for Growpital, but the way forward for Growpital, it will be very, very hard for them to recover from this blow. Because even SEBI lift the restricting order and damage has already been done, and people will take this opportunity to remove their money at the quickest possible way. So I don't know how much sustainable Growpital's business will be after that.
Hmm. That sounds ominous, but well. Uh, Now, in your LinkedIn update, you had mentioned quote unquote red flags for investing in Growpital. Uh, According to you, what were those red flags?
I those are my personal opinions. Podcast on this, but investors, very deep due diligence and the corporate governance metrics. So let's say the founder's background was never in agriculture, as far as I'm of the opinion, and there was an ongoing pending case in Jaipur High Court against the founder, which the public can go and find themselves. The corporate governance points were that founder's wife was the designated partner in all the LLPs where she had no business to do with Growpital. She was not even on the payroll. That's a bit of a red flag for me. And when you're growing so aggressively, so fast, taking in crores of rupees every day, how do you deploy that? How do you even make sense of the returns you're providing? You claim that there are 60 to 70% margins, but how do you prove that? There is no proof. There is no financial statement which Growpital has given to its investors to prove that they're actually making that level of. Those are all red flags in my opinion. There is not enough transparency for me as an investor to actually assess the risk in the business. And when I can't assess the risk, that investment is not worth it.
Okay. Uh, is it true that you were part of a WhatsApp group of the Growpital investors, and due to your commentary over there, which was probably sounding these red flags, you were banished from there?
I was part of the group. I got an invitation on email. I joined the group because I had invested in Growpital in the past, around 2,20,000 rupees in two different plans. But I did not do my due diligence at the time. As soon as I did my due diligence, I withdrew. I withdrew that money. So I was part of the group for I think 2 or 3 days until someone from Growpital team removed me, stating that because I'm not an active partner, I can't be part of the group, which I think so is fair in my opinion because it's only a partners group.
Okay. Uh, did you or your company complain against Growpital to SEBI?
We don't have the power, we don't have the bandwidth, and we are not even known in the market that much to make that kind of impact. This is someone higher up who has done something. Yeah.
And finally, one last question about Growpital. I'm personally an investor in Growpital. My money is also stuck over there, for full disclosure. So, do you think that the regulatory bodies can come in some way directly after individual investors in Growpital?
No, not really. I mean, as an individual investor, you were always kept in the dark about the model. You were not involved in the day-to-day operations as well, and that's the point that SEBI has made in their report as well. So there is no way I expect any sort of regulatory trouble for the individual investors. What I fear for is that you might not get your principal back. That's the only thing that I feel. But from a regulatory lawsuit or regulatory trouble point of view, no, you will never be at fault. That's what I think. But I'm not a lawyer, so.
Okay, that's a relief to know. Now I'll switch gears since you are a CFA and FRM, and your profile also mentions alt investments. So uh, let's switch gears and talk in a more generic fashion for the benefit of the viewers. So, what's the definition of an alternate or an alt investment according to you?
See, anything it is different in each and every country. I have worked in the UK for last 5 years managing a multi-strategy fund. I was the implementation manager for a £3 billion fund in for a company named Aviva Investors. Alternatives there means different, but primarily speaking about India, anything that's not a mutual fund or PMS or a bond is alternatives. People right now are considering debt as an alternative as well because the platforms are branding themselves as alternatives that invest in a bond because debt market in India is very small at a retailer level. People still don't understand or get the idea of investing in a government bond or a corporate bond and what are the risks associated with. So they call it alternatives, but in my opinion, there are two types of alternatives. One is regulated, one is unregulated. Regulated alternatives are all the alternative investment funds. There are three types of AIF: Cat 1, Cat 2, Cat 3. Cat is categories. They all have different types of restriction, different types of taxation. We have mentioned it in one of our blogs, if anyone wants to read it. But in terms of unregulated alternatives, anything that is not mutual fund, PMS, AIF will fall under unregulated alternatives. So be that leasing of certain assets and then to another company, be that agri investments, be that fractional real estate. For fractional real estate, actually, government is coming up with MSM REITs regulation, but at this stage, they are still semi-regulated, I would say. I mean, regulator has recognized that they will come up with the regulation. They have put out a consultation paper as well, which is positive for the industry. But at this stage, they are not very regulated. It's a gray area. And invoice discounting is also another area which I am also big on. I've invested heavily in invoice discounting on different platforms. That is also still an unregulated product from a retail investor's point of
Okay.
view, and many more. Yeah.
Okay. Thanks. So typically, what percentage of a person's portfolio should be in alts?
See, if we talk about unregulated, I'll tell you my personal portfolio revolves between 5 to 10% because I consider myself as a educated financial investor. I can assess the risk. I have got that skill set of assessing the risk. So I am maybe 5 to 10% is a decent number. And this is only considering debt-based investment. Some people do startup investments and all that sort of stuff as well. I don't do them. For people who do, they invest close to 30% of their wealth because they can take that level of risk. But for someone who is not from a finance background and who is just getting started into alternatives, I would say start with regulated alternatives. There are platform OBPP platforms, online bond platform providers, which is a SEBI regulation which has come up. Invest via those into regulated, listed, rated bonds up to 2 to 5% of your wealth, just for diversification purposes. Once you get comfortable, if it suits your profile, if your financial advisor allows or suggests, maybe increase your allocation. If you don't understand the product, do not invest in. Never. Uh, that's so. To answer your question, simply 2 to 5% is what I would say is good from a diversification point of view. If someone has never invested, if someone has invested in it, yeah, maybe 5 to 10%.
Okay. Uh, and coming to the investment platforms in India, one platform caught my eye. There's a solar power investment platform called Sunday Grids. Uh, do you have any view
Yeah.
on that?
Yeah, we did a podcast with them. We wrote an article, detailed company profile on them as well. Super innovative. I mean, it's a very innovative model. Offsetting your electricity bills against your investments. I mean, who could think that? So I find that model very innovative. However, from a retail investor's point of view, if I want to go big on Sunday Grids, let's say my electricity bill comes only 10,000 rupees. I will only make an investment up to certain amount which will help me offset, let's say, maybe 100% of that bill, which is 10,000. But what if I Sunday Grids? I want to double my investment amount.
Right.
Then my electricity credits will be around 20,000 rupees. But I can't use that electricity credits because my electricity bill is only of 10,000 rupees. So that extra 10,000 credits will stay in my account and I can't do anything. This is a feedback that we have passed down to Sunday Grid's team as well. And I am sure they're working on it already. There are some problems with, when if the company goes bankrupt, how will the assets be divided amongst investors from a legal standpoint? But it's very fine print. But it's a risk that we have highlighted in a blog as well, which you can or your viewers can check it out.
Sure. Uh, and what are your views on apps like Jar and Gullak for gold stroke silver investments, and especially including leasing of gold?
See, when you buy gold, you buy it because you feel safe about. Gold is synonymous to safety. Whenever market crashes happen, people flock towards gold. That's the general behavior worldwide. So if I have to buy gold, I would always prefer physical gold, SGBs, gold ETFs, or gold mutual funds. I would never ever buy a digital gold because, first of all, I have to pay 3% GST upfront. And then, my sense of safety is gone. Whatever happens to that platform, if they're not able to service me, yes, they will store the gold in, registered vaults by Augmont, or there are two or three other names. But what if the platform goes bust? Who will service my digital gold? So that sense of safety, primarily because of is completely gone. So the proposition of digital is not value. And leasing that gold, if you go in the offline market, there are many jewelers as well in in your local cities, who will be happily taking your gold and give you whatever interest rate these platforms are also giving. Yes, that will also be unsecured kind of loan, uh, but I mean, it's a very similar thing to digital gold. So I mean, up to you if you want to optimize. I think we should not over optimize certain things just to earn extra return. When you are buying just keep it.
Okay. What are your views on the regulatory environment in India as far as the alternate investments are concerned?
See, in the last 1 month itself, I have personally felt that SEBI has started taking very strict action against certain platforms. Growpital is one example. Then there was another example just 2 or 3 days back, a company called Shares Bazaar, which was promising 48% fixed returns by making money in stock markets. 48%. So SEBI released a order. They issued an order, and all their AIF accounts are now frozen. So I mean, these things are happening very frequently now, because every now and then some or other scheme is coming up in the market and trying to launch a Ponzi scheme. Because with digital presence, your reach is so wide, you can attract so many investors that SEBI is also nowadays scared. So they will always be behind the curve, of course, because these products come faster than what SEBI can take action. But I feel they are catching up. They are bringing good regulations already into the picture, like the OBPP regulation. It was a game changer for the bond industry. Then the MSM REITs regulation for the fractional real estate platforms. And now for tokenization as well, SEBI is not involved, but in the gift city, there's another regulator called IFSCA. So tokenized real estate platforms like Alt DRX, Riser, Terrazzo, and RealX, these guys are also uh, monitoring how will that tokenized framework come up and then get regulated, either under the MSM REITs framework or tokenized framework. So I feel only the regulated platforms will survive sooner or later. I mean, whatever is right now going on in the unregulated space will go on maybe another 1 or 2 years. But when people burn their hands with their hard-earned money, they'll realize, yeah, bonds ही better है. Regulated पे ही जाना चाहिए. So we'll see.
Okay. Uh, I've got just two more questions. The first one being, what's your view on crypto investments, primarily BTC and Ethereum?
See, full disclosure, I hold some BTC, but I bought that in 2014, 10 years back, just to play around with. I bought it when BTC was, I think, 70,000 rupees, and I bought it for 10,000 rupees. When that doubled to 20,000, I took out half my money and then kept whatever was there. So that has grown to a big amount now. But I have never traded in BTC or ETH, or for that matter, any other cryptocurrency, because again, I don't understand where the underlying value comes from. If I don't understand where the underlying value or risk comes from, I don't trade it. I don't invest.
Okay, that's a fair answer. And the last question, you are VP of Ladderup Wealth. So what does your company do in the field of
Yeah.
investments, and how can one reach out to you for collaboration and the kind of collaborations?
See, Ladderup, I joined Ladderup Wealth just 2 weeks back. I was, like I said, I was in London for last 5 years. I have joined there as a strategy, head of strategy, where I'm leading three pillars of strategy: digital, data, and product strategy. My core concept for these strategies is, for digital, it's जो दिखता है वो बिकता है. Data is कि data नहीं तो कुछ नहीं. आज की डेट में data is the new oil. And my product strategies each and every person says kuch naya batao yaar to their wealth manager. They don't like normal mutual funds or PMS. So I'm working on these three pillars at Ladder of Wealth right now. Ladder of Wealth is a very traditional uh, wealth management unit, part of Ladderup Group, which is listed on Bombay Stock Exchange for last 30 years. And they manage close to 2,000 crores in AUM right now. As a mutual fund distributor, their own PMS and distributors for other AIFs and debt products. And if somebody is very serious about their wealth, they will need an advisor, because even the likes of Tatas, Nilekanis, and Murthy's, they all have their own family offices and advisors. So if you're ever serious about wealth, you will not think about, okay, इसको इतना पैसा देना पड़े, why should I pay someone to invest on my behalf? Because when you pay someone to invest on your behalf, it's supported by correct thesis, right thesis, and logical decision making, which is not emotionally biased. And that's what Ladder of Wealth does for wealthy individuals, HNIs, ultra HNIs, and family offices, right? That being said, we are now building a digital channel which will acquire upcoming HNIs, high earners who are looking to build their wealth seriously and not burning their hands with random products. And I'm happy to speak to anyone who would like to get their wealth managed.
Okay,
But that's
great,
what we
Yash.
do.
So thanks for that. And for full disclosure, this is a friendly chat with you. My channel is not monetized. Neither have we, exchanged any gifts or money for doing this interview. It's completely a friendly chat. You corroborate that, Yash, right?
Yeah, yeah, sure. Yeah.
Right. So thanks, Yash, for talking to us, and best wishes.
Thank you, Prashant. Thanks for inviting me.